Today I'd like to take a real quick minute to talk to you about the risk associated with private mortgage trust deed investing. Well, in all actuality, some of the major risks. I won't be able to cover absolutely every risk associated with this style of investing, but I do want to cover the major risk, and I want to show you how you can actually truly mitigate those risks so that you are able to make more sound, solid financial decisions concerning your investments. So, what are some of the things that we're going to cover today? Well, we're going to go over your major risk associated with private mortgage and trust deed investing. And then we're going to show you how we mitigate and really control those risks to where we know, we're confident that we are having sound investment decisions for ourselves and our partner investors. So one of our first things that we'll ever do for ourselves before we started this business, we created a company policies and procedures book. And this also has a risk mitigation matrix in it. It's a several page document that covers as many possible risks that we or many of our advisors, which include brokers, escrow companies, attorneys, all these people that have come up with possible risk, and then we have developed, okay, how can we mitigate that risk? Well, we'll do this, we'll implement this, we'll change this. And so by putting all that together, we've written it out, and we actually have our own company's policies, procedures, and then inside this we have a risk mitigation matrix for that. So definitely something that as you begin your pathway into hopefully investing in private mortgages and deeds of trust, that this will be something you yourself create, or you find somebody that has done this, and then you will rely upon them, you ask them questions, but you get to know this information yourself. One of the first major risks that I would like to cover is, how do you know that your investment is secured by something? Meaning, if you invest in a private mortgage, you can go online and you can confirm and verify that that property is secured by your mortgage, your deed of trust, and that you or your company, your entity, actually is the lien holder on that mortgage or deed of trust. So you may ask, well, can I be scammed? The answer to that is yes and no. Yes, in the fact that if you do not do your research and you do not confirm and verify who you're dealing with, then yes, you absolutely can be scammed. No, in the fact that you have all these tools available to you to where you know when you do a private mortgage and loan, is that title company and escrow company, are they actually licensed in the state that is conducting the title and escrow? You can confirm whether your attorney is actually in good standing with the bar association. Every single state has a bar association. You can go online, look up that attorney on the bar association, and you can see if they have any malpractice lawsuits or anything negative against them from the bar. This goes across for every licensed individual within the real estate realm. You can confirm and verify that somebody has a good standing, that somebody has a license, that they're legally able to practice that business within the state. Another question that is asked to us is, can I lose some or all of my capital? It's again depending upon you, and that's what makes this business so beautiful. It is depending upon you and the implementation that you have on how to mitigate your risk. Again, it is all about your team, and have you vetted and verified who you're doing business with. If you have an extremely high probability that not only will you get your capital back, but you'll actually get all of the interest that you're supposed to get. Now, another question is, well, what if the property is damaged, or what if it's destroyed, completely obliterated? What we make sure is that when our borrower, whoever we're lending the money to, before you go to close, you can confirm and verify that, number one, they have sufficient insurance, that the insurance names you, the lender, as loss payee and additionally insured. Here's another question that we have sometimes is, what if we go to closing, after it closes, there's another lien or encumbrance against the property that we didn't know about? you have what is called title insurance. Now, this is a company, you've probably seen them if you've ever bought a property. You've seen it, Chicago, First American. These are title companies that do research and basically like a background check on that property. And they come back and they report to you as the lender that says, you will have first or second position, and these are the liens either in front or behind you on the property. Now, why that's important is because when you go to close, you know without a shadow of a doubt that you are in first or second position. If you're in second or anything past that, then you know who is in front of you. That gives tremendous security when you're going to closing and you're lending your money against the property. Now, another question that we have is, what if a borrower misses his payment? Now, this is really incredible, because what we have done for ourselves and our partner investor is that if the monthly payment is going to be $1,000, and let's say the rehab and actually getting the property on the market and sold will take approximately 4 months. What we'll go ahead and do is collect 4 months of interest from the borrower, put it in escrow in our servicing company, and on the first of every month, they take 1 month's worth of interest and they pay it to all parties involved. Well, that means you are guaranteed your monthly payment for the duration of that loan. That's incredible. You literally, because of the way that as a lender, you get to structure the deal, you're literally requiring that you are guaranteed your interest payments for a certain period of time. One of the other questions we get asked is, what happens if the market fluctuates or the market crashes like it did in 2006 and 2008? So you can hedge your position in real estate, in private mortgage investing, by two ways. You can ensure that you do short-term loans, 12 months or less. We like, the most we'll do is probably 18 months. So short-term loans. The second way to hedge against that risk is by making sure the borrower has something to lose. This prevents them from walking away from the project should the market start to turn, and it also even makes your position that much more safer because they have their own money into the game. They don't want to lose that money. It's their hard-earned money. So they're going to do everything and work with you as the private mortgage investor to make sure that that asset throws off the return that everybody's expecting and wanting. Now, you may be thinking, wow, this is just incredible. Like, I'm very excited about the potential that this has. I understand that I can mitigate my risk, and yet I can make good, sound, solid decisions. I can use leverage other people's time, other people's experience, other people's knowledge, other people's education, other people's wisdom. I mean, that's an incredible amount of information and time that you get to leverage, and you can do all that because of the teams that you can put into place. You may realize all this. So your question may be, well, where do I begin? Where can I start doing all this? And I wanted to ask you a question. What if I can show you how you can become educated and understand how to use private mortgage investing to pass on to your children, your sons and daughters, so that you can create that generational wealth and then build it? Leverage other people's time, their experience, their qualifications, without spending the thousands of hours, literally the thousands of hours and the money involved with establishing a network, establishing a team, having all of that put into place. And instead you get to use leverage, and I'm not even talking about the financial leverage. You get to leverage all these things that are already existing, already working. You can jump on a ship that is already cruising straight for retirement, is cruising straight for a true freedom to do what you want, with whomever you want, whenever you want to do it. Have your money work for you. Imagine being able to live the life that you and your family want. You can go wherever you want. You can spend that time with those who you love the most. And every single one of your dollars is like an employee, and it is making you wealthy. And what if I can show you how you can participate in big loans, but not put all that money into it. For example, earlier when we were talking about the $100,000 loan, well, what if I could show you a way that you wouldn't have to put the full $100,000, that you could actually participate with other investors and you can fund private mortgages without having to put all of that money into one loan. Another way that you can hedge, diversify, and spread your risk. If all of this sounds incredible, then what I'm going to ask is that you simply contact me. And there's no fee. It's completely just, I want to talk to you and figure out where it is that you want to take yourself, where you want to take your family, and then how we can work together to truly build and create that generational wealth that you know you deserve, that you know you want, and that your family deserves. You can go to the bottom of the web page and you can click on the Contact Us button, or if you have any questions, something I didn't answer, I would love to hear back from you. Thank you for taking the time to listen to this short video. God bless, and I look forward to spearheading your investments for the future.